This podcast is for informational purposes only and does not constitute legal, tax, investment, financial, or other advice. It is not intended to cause or induce breach of an existing agency agreement.
Hello? 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 This is the Vancouver
Commercial
Real Estate Podcast.
And welcome back to the Vancouver Commercial Real Estate Podcast. I'm your host, Cory Wright.
And I'm your sometimes host, Matt Scalina.
And Matt, on the show today, we have none other than Frank O'Brien of the Western Investor BIV Media Group. He is here for his annual Western Investor reveal.
Second annual.
The second annual
favorite here.
Reveal of their top 5 markets. And this is exciting. There
was two that really surprised.
Yeah. Two of them caught off us guard. One of them, I think we kind of predicted a little bit, hoping when he talks about what the number one, when he talks where it's located, we kind of thought we pegged it. But I'll tell you, be honest with you, I was excited. Like, he would say the numbers and he would say a market and we would cheer.
And you know what? And he makes a strong case. I feel like it was a great episode. And man, some interesting markets. I think I'll quote Frank here. If you can't make money in the next year in that market, find another hustle. It's basically, I'm paraphrasing. I don't know if he said hustle, but no, it makes for good listening for sure. Really, really interesting picks.
Some really interesting. And Frank's a great guy, just on top of the whole thing. He's so charismatic with the storytelling. And then the Western Investor, which almost acts as like a Bible for commercial real estate in Western Canada. I mean, they always put out great stuff every single month. So it was a pleasure having him on again. And we're looking to have him on again this time next year and continue this annual tradition now.
Absolutely. And last but not least, there was David Eby's housing platform policy proposal, whatever you want to call it, put out yesterday. And Frank has been thinking about that a lot. So he goes on a tear early on that is not to be missed. So stay tuned. Stay tuned for that.
It's good. No, he's great for that.
What else do we have, Cory, before we cut to our talk with Frank?
One thing I would like to plug a little bit, I'm throwing this out there only because I'm so proud of our amazing team at William Wright Commercial. We're very fortunate we get a lot of recognition throughout the year, but it's amazing when you get sort of like company-wide recognition. And this is just everybody's hard work over the past few years, that William Wright Commercial was named the 167th top growing company in Canada for 2021 by the Globe and Mail. So we normally don't kind of put it out there when we get achievements.
In the top? So is that like a top 200 list? Or?
It's top 400 fastest growing companies in Canada. And Globe and Mail publishes it on an annual basis. And it's everything from tech companies to law firms to everything. And we were very honored to be part of the list. And I want to make sure that we've got a team of about 45 people across the province and growing that has all contributed to getting to us to where we are. So I want to make sure that they all get the recognition they should, because they work so hard every day. And to get that recognition from a Canada-wide perspective is always amazing.
Hear, hear. I did not know this. Congrats. That's fantastic. Well, maybe we'll cut to our talk with Frank O'Brien, but you're doing God's work. So keep it up.
It's not me. It's everybody else. I'm just doing. They gave me the time of day to come here and talk to you. All right, guys, enjoy. This week's episode is brought to you by our great friends at Impact Commercial Group.
Really enjoy working with Impact Commercial, and we should say Al and his team can basically do anything when it comes to lending.
Anything when it comes under the commercial umbrella. You're building a building in development, we got you covered. You're buying land, we'll make that happen for you. You're investing in a property or multifamily building, check. Owner-occupiers looking to acquire their own space, double check. Anything commercial financing you need, Impact Commercial is your go-to.
ImpactCommercial.ca, and we should say over 50 years of combined experience. So trust these guys. They're the right fit.
Best in the business, in my opinion.
Okay, so we're here with Frank O'Brien, editor at the Western Investor with the Business in Vancouver, or the BIV Media Group. We should say past guest fan favorite, back to join us again. How you doing, Frank?
I'm doing fine. It's great, actually.
That's great. We always start the show, Frank, asking, in case a listener didn't hear you on the show last time or doesn't read The Western Investor, which is doubtful. But in case there's somebody out there, can you start by telling us, our listeners, a little bit about yourself?
I've been a longtime writer and editor. I've written for, Financial Post and Globe and Mail and a number of other publications. But the last few years, I must be 12 years now, I've been the editor of Western Investor with the BIV Media Group. I also am a senior real estate writer with Business in Vancouver. Western Investor is published right across Western Canada. We're going into our 38th year in 2023. And I suspect it's the largest commercial real estate paper in Canada now. Compared to most print editions, we actually are getting larger in print. We put out this next issue coming out is 48 pages and it's packed, like very heavy with advertising, which is, rare in the real estate community or in the publishing community today. And we also have a very active web page that has a lot of followers on it. And I'm proud to edit it. It's a really good team you've got there. And I think we do a good job.
So Frank, last time we had you on, and we'll get into this in a second, you guys have every year, you have your annual top 5 markets in which you feel is where people should put their money. So we definitely want to get into that. But before we do, this is sort of fresh off the press here.
Hot off the press.
NDP candidate for premier, David Eby, came out with his housing policy yesterday.
Huge plot. It's a big one.
It's a big plan. It's a big one. And I think we're all probably in agreement here that most highly spectacle at this point, he will be the next premier to fill John Horgan's chair, at least until the next election comes around. And he put forward a very interesting housing policy that I think a lot of people in this industry would love to hear. And Frank, we'd love to hear your thoughts on that. On it. Maybe we'll unpack it a little bit because maybe some people don't know all the inside of what it is and maybe how it may be good or bad for renters.
Okay, well, I'll touch on the highlights, and then I've got a kind of a counterintuitive take on this thing. Like as many things of the NDP, housing policies, they don't really think them through. They, kind of a knee-jerk thing. We're going to do this. We're going to do that, and then when it turns dark on them, they go, "Oh my God, we never thought of that." Well, this is a perfect example. This sweeping policy that Eby has come out with, who is, as you say, will be, at least until the next election, will be the premier of British Columbia. Now, there's a number of things that one, take for example, the ruling that condominiums can no longer allow rentals. It's my opinion that the entire policy that it's come out with is a gift to speculators, even though it's billed totally the opposite of that. It's an absolute gift to speculators, especially in a down market that we're having right now. Like, thank God David Eby has been so generous to the real estate speculators. For example, if you're buying a condominium right now and you're looking at a building, but it doesn't allow rentals in a city that has the highest rental rates in the country, you think, well, I'm not going to buy that in that condo building, right? I'll look for another building. But unfortunately, the really prime buildings don't allow rentals. But now they will be forced to allow rentals, right? So if you're an investor, great. You go in, you buy this rental, because some people in these condos now will start selling it, saying, well, I'm going to get out of the condo market. I'm going to buy a house because I don't want to be living in a building that's going to go rental, right? Like some people are prejudiced against rentals, right, but investors aren't. So the investor goes in, buys a condominium, rents it out, right? And the rents are super high in Vancouver. The vacancy rate is really low. He gets maybe $3,000, $3,200, maybe $3,500 a month for this nice condo, okay? And then you've got speculation tax. Fantastic. Another gift to these speculators. It only lasts 2 years. Now, prices have been falling in Vancouver by 2 to 3% a month. It's February. Nobody's flipping houses anymore. The BC Real Estate Association says that by next year, the house prices across BC, home prices, are going to be down another 3 to 4%. Nobody's going to be flipping houses. But in the meantime, you're getting this great rental income coming in on it. And at the end of the 2 years, when, the recovery is supposed to be, taking shape by 24 or 25, you sell it, right? You sell it into a rising market. you make money. It's an absolutely gift to speculators. And then they go even further. They say, okay, if someone's selling an affordable housing building, which means an older apartment building that needs a lot of work, usually in Vancouver, that's where the cheap rent is. Well, they don't want a speculator to buy it. They want somebody to buy it who is like a First Nation or a nonprofit housing group. And they put up $500 million of taxpayers' money as a fund to help these groups buy the building. Sounds great, especially if you're one of the many people in Vancouver who owns one of these old apartment buildings. If you look at what the province has done when they've gone out and bought old hotels like the Patricia Hotel in Vancouver, where they paid $300,000 a suite for the Patricia Hotel, when you could have bought, a Chateau Laurier type hotel in Ottawa for the same price, per door, right? So all of a sudden, you've got the government backing up this. You cannot lose as an investor that owns all these old apartment buildings, because it's a guaranteed sale. Investors may not want to buy it, but the people in the building will say, look, hey, government, you give us some money and we'll buy this building. So they go, great. Then, of course, when they buy the building, then they just discover that they can only raise the rent by 1.5%. But the furnace is gone, and it's going to cost them zillions to fix it. The roof is gone. It's going to cost them even more. The hydro bills are through the roof, and the taxes keep going up. But the investor that owned the building in the first place, he's already out of it. See? Then he can go buy, make his own virtual apartment building by buying all these condos that are being forced to be rentals. I mean, if you're a speculator in Vancouver, you should say, thank you, David. You've really come through for us this time, right? So that's my opinion of what's going to happen with this.
One thing's for sure in the city of Vancouver, Frank, we work with a lot of investors and I guess people that are, as anyone does, speculates on the future of the market. And areas like Kitsilano or the older buildings in Mount Pleasant, Fairview, all of those areas have basically been off limits to people looking for an investment property over the years because of those rental restrictions. So I think this opens up like some of the best real estate in the city, basically in terms of multifamily for investors. That's for sure.
Oh yeah, for sure. But this way, the government guarantees that you can sell it, and probably at a top dollar. Like if you're putting an old building up for sale, a 10-unit on West Broadway or close to West Broadway, it's worth a lot of money, right? But these days, with the higher interest rates, et cetera, they say, well, it may be a slower time trying to sell it than it would have been like 2 years ago. Mm-hmm. But now you've got a guaranteed buyer in the government, and the people in the building, of course, staunch NDP supporters, most of them will say, give us this support and let us buy this building. So they do. And then it's the taxpayers that are stuck on it because they're covering the loans on it. But the people in the building now have to fix up the building. You have to take all the responsibility of an owner, you see. And meanwhile, the investors just walked away from it. It's great if you're a speculator. So
now, Frank,
I haven't take on that.
I haven't had a chance to go through the whole policy there. Was there any touching base on the rental rates and restrictions on increasing the rents and stuff like that? Because I know right now our good friends over there at the NDP that previously it was just sort of a CPI, annual rate increase, and then this year inflation kicks in, and now we're up to 6.8, and then obviously they just changed the rules like most governments do, and they were going to cap it at 2 this year and let the landlords suffer. Was there any talk around that in the policy?
No, there's no talk about that at all, because that, of course, is a negative. Like the people in the building may say, "Hey, wait a minute, we don't want to buy this building. We can't afford it. It's only like the rent increases are capped." It's great if you're a tenant, not so great if you're an owner. Mm-hmm. And these people will then become owners. People in the building are now the owners of it. And also, I think there's something bothering me too about co-ops in Vancouver. There's talk as if co-ops are, like a lifetime assurance of affordable housing, but actually they are becoming a speculator's dream. The people that have been in it for years, like if you look up in Kerrisdale, where Cressy bought 4 old co-op buildings and turned it into a luxury condominium development. The people that own these co-ops, and it's interesting, there's no government rules on this as far as I found out, is that the people in the co-ops actually own the building. There may be only 10 people or 12 people in the building. They own that building as a co-op, and they can sell that building, which is what they did with Cressy. And there's been 16 of these sold in Vancouver for a huge profit.
Mm-hmm.
Now, the people that sell it, they get, they build like a 28-story tower and they put 10 units in there, which the people that were in the co-op get to go into, see? So they benefit from it. But co-ops, rather than being like a permanent low-cost housing, is actually a way for a select few people to make a lot of money on their real estate.
Interesting. So if I understand, we have the rental restrictions being removed, which opens up the market for.
And then the other one is that if you have a single family lot, you can put 3 units onto it. Now, what do you think is going to happen to the price of a house anywhere in BC now? What's going to happen to the price of a house that's already worth $1 million if suddenly you can, even if you don't do it, but it's zoned automatically for 3 units? It increases the price at least 20%, maybe 30%. It's just, it's crazy. It's crazy. It's really not going to make the homes any cheaper.
So Frank, it's fair to say that you're voting NDP next round then.
Oh, definitely. They got it. Like with policies like this, you can't miss.
And the one thing you mentioned there that I think I'll just put a little bit of emphasis on is the NDP kind of come up with their policies and all of that stuff and kind of throwing them out there to see how it works. And I was just floored myself when they raised the foreign buyers tax and that didn't stop the market. Maybe that's just speaking for myself there, but I couldn't believe that didn't stop the market. Frank, what do you like? It's just throwing darts at a wall.
Oh yeah, that's crazy. Foreign buyers have a lot other markets to play in that aren't asking 20%. And the ironic thing is that the second biggest foreign buyer of real estate in the United States are Canadians.
Right.
And the Chinese are number 1. We're number 2, right? In Florida and in Arizona, the third largest landlord in Arizona is a 34-year-old mother from West Vancouver.
I think she's been on the show.
Janet LePage, she's brilliant.
Yeah.
She's brilliant.
She's a force. That is for sure. That's an understatement.
She is a force. Yeah, now she's moved into Texas like a whirlwind. So, so it's so hypocritical. We're saying to people, like it is so provincial. Like, imagine if you were in Paris and say, no foreign buyers can buy a home in Paris. Like, what?
Yeah.
And then you say, you can't even have a small apartment in Paris to visit once in a while, like people have, or we'll charge you a huge speculation tax when your $1 million condo isn't being used. Like, who is going to rent it out? I mean, it's so provincial, so backward. It's just unbelievable. But as I say, with stupidity like that running the government, like here's another one. Good thing too. If you're an investor and you're trying to develop land, right, and you're having a hassle with the local municipality, guess what? The government now will go in and twist the mayor's arm and say, you've got to approve this thing. You have to approve this thing. I mean, like, it's called democracy, right? But it's just unbelievable. Yeah. Oh, anyway. So welcome to the new NDP government, the most speculator-friendly government in the entire country. So here we go.
Yeah. And just so you know, that will cool the market down. If you're wondering, for all of our listeners, there's speculators allowing them in the market definitely slows the market down.
That was one thing I've been kind of thinking.
Always buy in the dip. Always buy the dip. And right now it's dipping really good.
Yeah, agree.
I was just, as a final thought here, the flipping tax, which you mentioned, right? That there's going to be a flipping tax apparently if you trade real estate within 2 years of buying it.
2 years, 2 years. But
it seems problematic for younger people, first off, who are moving through the market and potentially moving for jobs and all the rest. But I work on the residential side where units that are in disarray, like really beat up units, are really, most of the market don't want those units. And it's actually very challenging to renovate, and especially with inflation and everything else. Like that's a huge issue. I just wonder what's going to happen to, that segment of the market where right now, it's very difficult to sell unit that needs substantial renovation. So I wonder, taking out those guys that know what they're doing and are able to actually improve the housing stock, it's kind of an interesting move as well. But I guess we'll see how it plays out.
Yeah, we'll see how it plays out. Those are, there are some units in disrepair, and the renovation costs now are getting really, really, really bad. It's hard to even get appliances on time,
right?
Yeah,
or find somebody to do the work.
Yeah. Exactly. So I don't know what the answer is there, but at least if the person owns the old condominium, right, the building now will have to make it a rental, right? So there may be some opportunity there to make some short-term money on it anyway while you're ordering the stuff and getting it all together. You can get it with 3 or 4 months of rent out of it before you get in. But if it's not, and you gotta, the building's going to be like if you buy a conventional condo and you can't rent it like in a non-rental building, then you gotta have it empty while you're doing all this stuff, getting all the orders in and getting all the tradesmen lined up. At least with this bright new plan from the NDP, it's a rental project. It's a rental unit anyway, so it's great. It's great.
I think
Your neighbors may hate you, but what the hell, right?
I think I can speak for all of our listeners, but Frank, I'd love to sit down with you, give you a bottle of wine, and talk David Eby and the NDP one night.
Sure, anytime.
Frank, someone in your shoes, obviously there with the Western investor, you're seeing everything that's happened around you. What has your thoughts been over the past 6 months, and obviously all the great stories that you guys have put out there on the overall commercial market, trading, asset classes? What are you guys seeing on the side of the Western investor there?
Have you looked at what's happening in San Francisco?
You know what? Enlighten us. I'm trying to think.
Okay, well, in San Francisco, there's talk that the entire commercial downtown market is going to collapse because nobody's coming back to the office. I mean, it's terrible. Like here's an example. Wells Fargo put up what would normally be a very nice building in downtown San Francisco. They bought it at $348 a square foot in 2017. They tried selling it this year. The building's half empty because nobody's come back to work, right? And the bids they got were 70,000 or 60 or 70% less than what they paid for it in 2017. They took it off the market. They're called zombie buildings, and San Francisco's got 15 million square feet vacancy of that exactly type of building. So, but I've been talking to people in Vancouver. We are a totally different animal. Yep. Vancouver is red hot. The office market here, like in San Francisco, they got 15%, and a lot of people say it's closer to 20%. In Vancouver, it's 7%, down from 8% in the second quarter. In the third quarter, 7%, going lower. We got Absorella building huge office space. The Fall Street Flats building selling out there. Like before they even finished, the entire Strata building sold out. Like 110,000 square feet there. Sold out just Avis and Young sold it just this week. Like Vancouver is red hot. It's a superlative commercial real estate market, and the industrial market, of course, has never stopped. So I'm very confident in Vancouver, but it's really a normalistic market. Like if you look across North America, like Vancouver it's really different. Like it's hard to say it's going to keep going the way it is, but boy, it's wonderful right now.
And do you have any sense, because it's interesting, at least a couple years back, we used to talk about, and I guess it's still applicable, but Cascadia or down the West Coast from Vancouver south as being kind of similar markets. But do you have a sense of why Vancouver's fared so much better than San Francisco?
Well, it's a key thing is immigration. That's what's drawn the tech firms up here. Like that tower they're building downtown there, where at the old post office, it's called the Post. Well, Amazon came in and took the whole building up at 1.2 million square feet. Right, just crazy. Google's looking for more space in town. All these big companies are coming up here because in the U.S., it started under Trump, and they really haven't improved it. They got a really terrible immigration program of bringing in top level workers, especially from the Middle East and Asia and like that.
Yeah.
They have all these rules. Canada doesn't have that at all. Like we are hungry for per immigration. And that's where we're getting a lot of the tech people into Vancouver. And that's why they're here, because the real estate is as cheap or cheaper than in San Francisco or Los Angeles, right? Or New York City for sure, right? And we've got this environment where people want to move here. Young tech people want to move here, even though we're paying them in Canadian dollars. They feel it's safer and there's more opportunities here, right?
Interesting.
They'd come here for a few months and then go to the States. And now they're not going to the States; they're staying here. It's a really important part of it that a lot of people miss.
So Canadian immigration policy has basically led to the commercial real estate in Vancouver and other cities eating the Americans' lunch.
Exactly. That's what I'm saying. Like San Francisco used to be a much more powerful office market than Vancouver. Now it's a ghost compared to Vancouver. It really is. And like I was talking to a major firm here in Vancouver yesterday, and I was asking about this. I said, "How come Vancouver's going so well?" He said, "Everybody in his office, and I think they've got a whole floor. And I know it's the whole floor, is about 12,000 square feet down on Melville Street there, and everybody's back to work, right? Everybody's back to work in the office, right? Where in San Francisco, a lot of people aren't coming back, and I think there's a kind of a movement in Vancouver to more people coming back to the office quicker than other places. Although San Francisco ranked dead last in the recovery in the market according to surveys I've seen, and in North America, Vancouver wasn't that much. Like they were 60 at that 60, and Vancouver was about 54. But if you look at what Avison Young's study has done, where they've looked at cell phone activity in the downtown core, close to, because they can track it right close to buildings, like office buildings, right. And they say it's recovering much quicker than most people think. And I think it is. I think Vancouver's got a real chance here of doing real well. The ones that are going to suffer is the B buildings, like in Yaletown. Yaletown's got a huge vacancy problem right now. They've got a lot of these old buildings, kind of cute at the time and stuff, but as companies get better, there's all this really great Class A space and AAA space that's downtown and in the suburbs that they are taking up and moving out of these older buildings that don't have all the bells and whistles.
No, I think I can sort of back that up too. What we see on the tenant side of things and the landlord side of things is it's been a very comfortable ride here when a lot of other cities have been really concerned about it. And we're seeing like where our office is located at the corner of Robson and Seymour, there's a very, very high government tenant pool in our building. Mm-hmm. And you'd be amazed how many of those government tenants are back in the office now. So if the government tenants are coming back, right, things are getting good. So Frank, one reason why we wanted to have you on today, because we had you on about a year ago here, and I know you have a very exciting issue that comes out every year where you guys dive deep into the province and do all of God's work here and dig out the 5 best markets that you guys feel for the upcoming year here.
We need a drum roll.
And I remember last year we had Victoria top that list. And I think it was 2 years in a row Victoria topped the list. Am I wrong?
No, it was, New West was in there. I had the list from last year with me.
I think,
anyway, that's ancient history.
This market moves.
We only look forward.
You might have been the top of the pile last week.
Leading the list this year is a town that's not even in. It's not even in British Columbia.
Can we start with number 5 and work our way to the top? This is I'm starting to get excited.
This is good here. And while we do this, Frank, I'm checking my bank account, which doesn't have much money in it, but I'm still going to take the notes anyways, just in case me and Matt can pool our money to buy something. So, Frank, let's start with number 5. Okay. What is the 5th best market?
Number 5 is the Mid-Island community of Nanaimo.
That's one of our favorites.
Okay. Now, we do a done deals feature in Western Investor every month, right? Yep. And we update it every week online. Nanaimo multifamily land is selling over there now for the equivalent of $3 million an acre, which is like unbelievable for Nanaimo. But there's a good reason for it. There's so many people moving into Nanaimo, not immigrants, people from across Canada, people from Saskatchewan and Ontario, Manitoba, coming into Nanaimo. It's really becoming hot. Also, For the retail side, if you look at it, starting at retail up, Nanaimo is the biggest employers in Nanaimo are all recession-resistant governments, hospital, medical services, and universities. So you've got this, a huge group of well-paid employees that aren't going anywhere and never get laid off or anything, right? That's all, so that's a really good base for an economy. But the industrial real estate is expanding because it's totally priced out in Victoria. So they're coming up island, and Nanaimo has quite a bit of land, and it's not like native Indian land or anything. It's freehold land. As an example of what's happening, there's a $100 million expansion at Nanaimo's container port that started and really kicks off next year. Now, a lot of people are trying to get in on that, but two big landholders own most of the land around there. But I hear they're willing to deal, willing to carve off some pieces like that, and it's going to be a big thing. It's just taking some of the pressure off of the Vancouver port, which is now the biggest port in the country, way ahead of Montreal. And Nanaimo's going to take that pressure off them. Nanaimo's a winner. I think it's going to be one of the strongest markets next year.
We had Mayor Krogh. We had Mayor Krogh on from Nanaimo on a previous episode, and he was talking all about how, I think it was, and I could be completely wrong in saying this, so we definitely have to fact check this, that in their OCP and when they're looking at the study of industrial land, that Nanaimo, at the pace it's growing, will be out of industrial land by 2040. So they were looking at where can we get more industrial land, because it was growing at such a rapid pace. They were worried that they wouldn't have enough to keep up with supply and demand issues over the next 15 years.
You got to be careful with those things. They've been saying Vancouver's been running out of land, which now is coming true, but they've been saying this for 20 years. And every year they say 5 years we'll be out of land, right? It's simply not true. There's a lot of underused industrial land that was bought years ago, like roofing companies, like out in Richmond, the Fraser Valley, the roofing companies. They have huge parking lots for their trucks, like huge. They have like 6 acres of land and a beat up old warehouse. There's a lot of infill in Nanaimo. So the mayor's right. He's trying to promote it. You got to buy now. You won't be able to get in. But Nanaimo's got a lot of land, a lot of industrial land over there.
So we got Nanaimo number 5. What hits the number 4 spot?
And it's a big winner. I'm curious to hear what the next 4 are.
Yeah, we're excited, Frank. What's number 4?
Penticton and the South Okanagan.
Oh, another good one.
Okay, please go explain why.
Okay. Penticton is challenging Kelowna as a hot spot in the Okanagan. Kelowna got greedy. Greed is killing Kelowna. It just, the prices up there got they're well over $1 million. There's no reason the homes in Kelowna should be well over $1 million. I'm not talking new homes up on the hill with a beautiful mountain view. I'm talking about, these old, like 1970, home on a back street, and they're still over $1 million. There's no reason for it. And the prices in Kelowna are coming down. They're going to come down a lot quicker. But Kelowna too, it's really expensive to build there. The city is automatically almost rubber stamps any development permit. They go, you can get a permit in Kelowna quicker than anywhere else. But then they start charging. As soon as you get your permit, then you go to get your development, your hookups and all that stuff. It costs $40,000 to $50,000 to put a single-family detached house there, just in fees in Kelowna. Just in fees. Also, Kelowna's got 40% of the land inside the city of Kelowna is agricultural land reserve, right? So you can't do anything with it. So it's it really makes it a hodgepodge of trying to make big developments work. So I think Kelowna is priced itself out of the market, and unless they get wise, they're going to suffer because Kelowna, the lakes in Kelowna are no better than they are in Penticton, but the prices in Penticton are a lot lower than they are there. Also, they've got 2 lakes in Penticton. It's closer to Vancouver, at least an hour and a half closer to Vancouver. And the best investment in Penticton right now, and in the whole South Okanagan, I'm talking about Soyuz too, which is another really, really good little hotspot there. But Penticton's a little more established, it's got better services, better hospital, all that kind of thing. So, but waterfront land, waterfront homes, 20 have sold this year in the South Okanagan at an average of $1.5 million, down 13% from the same time last year. But there's 40 of them on the market. it's a really good selection, and I think that's one of the best recreational markets right now for next year, with the challenge of being the number 4 on the list.
So if I understand we're talking waterfront homes as being the play in Penticton.
Yeah. There's only a small number of people that want to buy or can afford to buy a waterfront home, but there's a lot of waterfront acreage around there. You got 2 lakes, right? And it's not like Kelowna where it's been really been priced up, but like I say, 20 of them are sold this year, which is pretty good, at $1.5 million, which is pretty low, for waterfront.
Mm-hmm.
And that's with a home on the lake or one of the 2 lakes, and the price is down 13% from last year. I've got the prices for Kelowna waterfront, but I don't have it in front of me. But I know it's quite a bit higher, like 2.2 or something. So anyway, I think Penticton's a goer.
Very interesting. Okay, so we got Nanaimo number 5, Penticton number 4. I do feel like these are different. This is we don't want to look backwards, so we're looking forward. Let's go to number 3.
Yeah. Okay, number 3 is, and this may surprise you, Banfield.
Banfield.
They finally put a paved road in to Banfield from Port Alberni, right? It's the first paved road ever into this waterfront community that has lots of land, freehold land. There is a native reserve land in the neighboring town, but not in Banfield. It's freehold, right? And they've got beautiful beaches, right? The paved road is open now, but they're doing some special work around the hills coming into it like that. So it's not officially complete until early in 2023. But you'll be able to drive in there both from Ucluelet and from Port Alberni, right? Just like drive right in. And there's big developments going on there right now. People have started to, developers have started to catch on, but it's still cheap. Land and home prices have shot up 70% in the past year, compared to almost anywhere else in BC. They've gone down, and a lot of people are saying it's the next Tofino. And I believe them. Banfield is the last ground floor recreational oceanfront waterfront or oceanfront opportunity in BC. It's going to be huge over there.
Wow. Okay. Now that is a surprise. But having spent a little bit of time in Tofino this past summer, that's an exciting one.
They've got, and nobody ever gets into Banfield because there was a road that would tear the bottom off of a 2x4 trying to get in there. It was really bad. There was like a deaths on it and everything. So anyway, the government stepped up. They put the money into it, and this, it's fantastic. Banfield, like 5 years now, people say, "Oh, I remember when I bought in Banfield in 2023." It's just like. It's going to be great because there's a really good infrastructure over there anyway, with hotels like on the Pacific Rim, right?
Right.
It's a sophisticated, like if you look at Tofino, these guys know what they're doing, and they're the guys that are going to come in and change Banfield, just like Whistler was 50 years ago or something.
Wow.
So
this is that's really interesting. I'm sure the people of Banfield are not all of them will be super excited. It's like the best kept secret that they don't want anybody else to know about.
It's amazing. The old houses over there for sale, that they're hanging right on, over the ocean. It's incredible. Grandfather setbacks over there. It's great, really. But it's a raw frontier. You got to come in now, and but there's 2 big subdivisions going in. I talked to the small office they have there for a community development thing, and they're shocked, like what's happening. The price over there, the average house price now is around $600,000, where like last year, like a year ago, it was $250,000 or $300,000.
Wow.
Or something,
So Frank, I don't want to put the cart in front of the horse here, but we have Nanaimo at number 5, which is located as a port city. We got Penticton, and we talked about the 2 lakes. And we got Banfield, and we talked about the waterfront. I'm starting to see a pattern here.
Yeah, well, the next one's different.
Okay, hit us with that. So hit us with number 2, Frank.
Number 2 is East Vancouver.
Oh, that's the home of the Skeleators.
Forget Vancouver. People think about Vancouver, the west side of the downtown. Forget that. That's old. It's East Vancouver. That's the future. Now, just think, okay? 2 years from now, or next year, I'm talking 2023, the Broadway subway and the Millennium SkyTrain line extensions are both going in. And you know what the zoning there for, like loving a lot more density. But just the fact that those two are coming in, the Broadway subway and the extension from the Millennium SkyTrain up to the Olympic Village, right? Just that is going to make a huge, huge, huge change. And you've got the $2 billion St. Paul's Hospital going. It's the biggest medical expenditure in the country. $2 billion, more than that. By the time they get finished, it's going to be well over that. That's what the official figure is right now, somewhere around $2 billion. State-of-the-art 17-acre campus, health campus, is great. And it's in the Falls Creek Flats, which, as I mentioned earlier there before, a new building, like it's not even built yet. They were built as strata. Celtic Construction built it as strata. They're going to sell individual units in this building, 105,000 square feet. A medical company from California came in. They haven't even built the thing yet. They paid $123 million for it right now. That's what's happening down there. It's absolutely fantastic. What the Falls Creek Flats is going to do, and it's all in East Vancouver. It's going to, it's great. Okay. Then you have detached houses in East Vancouver are half the price they are on the west side, a couple of blocks away. Like, honestly, just like, 4 blocks, and the price goes from an average of $2.2 million to like 1.3, right? It's cheaper to buy a house in East Vancouver than on the North Shore,
right,
in Richmond, most of Burnaby. There's no reason for that. East Vancouver should be way higher, but it's not, because it's the east side, right? And then the government brings in this new rule on density, right? And combined with the Broadway corridor, well, the density is going to come between Commercial Drive, Renfrew, and Main Street, because the west side's already got a lot of the density going, but the east side doesn't. So it's going to be a great investment anywhere on the east side. And my comment on it: if a real estate investor can't make money next year in East Vancouver, they should get into another business. Because there's nowhere else in Canada where they're going to make as much as they will in. It's still expensive to get in. It's not a cheap market, but the payoff, East Vancouver is fantastic. It's the market in BC to watch.
Wow. So Frank, just before we get to the number one here, we'll get to the drum roll if we can here. I got your list from last year here. So just to recap last year as we build up the hype here. So we had number 5 last year, we had Winnipeg, which is where the Scalina brothers were born. We had Penticton at number 4, followed by our number 3 market was Surrey, followed by number 2 was Kelowna, and then the top market last year, Victoria. So to recap right. This year, we got Nanaimo, Penticton, Banfield, in brackets, Tofino coming down the pipeline. East Vancouver. Frank, what is the number 1 market?
Can we just sit on East Vancouver for a second here? This is, man, I'm loving what you're saying here, Frank. But let's get to number 1.
Okay, Calgary, Alberta, number 1.
I'll stop you there, and I don't want to say this now because hindsight's 2020. When you told me it was out of province, the first thing I thought was it's Calgary.
Yeah,
Calgary.
It's just Calgary is really eating Vancouver's lunch. If you look at it, like just in the last week, since September 16th or something, there's been just two announcements. De Havilland is going to build a aircraft manufacturing plant just outside of Calgary in Parkland County. Right? They bought like 750 acres of land. They're building a state-of-the-art aircraft manufacturing, plant there. They build all the fire, the planes that fight fires and like that, and search and rescue stuff. Right, De Havilland, and they're hiring 2,600 people. Okay, 2,600 people in manufacturing. Where does that ever happen in BC? Right, and then a high tech firm, like people talk about the Vancouver or the Calgary office market, but what they don't notice is that Calgary has so much office space that even with a 30% vacancy, well, 27% vacancy right now, they have more office space leased than all of Vancouver. It's more than Regina, Saskatchewan, and Winnipeg combined in Calgary. That's leased, fully leased, okay? And then you've got, this company came in from the States, and it's actually from India. It's a very high-tech firm, does data communication. Don't ask me what that means, but it's a huge company, 300,000 employees worldwide, $8 billion company annual. And they're hiring 1,000 people, tech people in Calgary in this new office building that they've taken over. Okay? It's huge. And then there's no rent controls in Alberta, but you can buy a condominium in Calgary for $165,000. I looked on Realtor.ca and I found all kinds of condominiums downtown for under $200,000. That's $200,000. But the rent in Calgary are almost the same as in Vancouver, like $1,600 to $2,200, 1 bedroom to 2 bedroom, right? It's like Vancouver, right? But the condos are like a fraction of the price. The average price on the west side of Vancouver is $900,000 for a condo. It's crazy. Okay.
Wow.
And there's no rent controls. Oil prices are flirting with US $100. Right. This is like, why not go to Calgary? Alberta's biggest city is ripe for real estate investors right now, like it's never been before. And still people are shy of Calgary, which is even better for investors. Get in now because it's going to rock and roll.
We in a previous episode, we had the ladies of Scout Real Estate firm out in Calgary. We had a couple of agents from Calgary and then also from Edmonton just to kind of play a game, kind of like, what's this worth in your city? And Calgary, they had talked about tremendous upside that's already taken place, and the runway there is still quite large, and how they were noticing a lot more investors and all that stuff start coming to the market here. So they pretty much they echoed what you just said there with the side of the investment side of it.
Yeah, but any astute investor would be definitely looking at Calgary right now. Like you can go in and buy like 8 condos in Calgary, which has, they've got a 3.5% rental vacancy rate. We got 1.2, but for higher quality stuff is lower in Calgary. Like you got good stuff, right?
Yeah.
So you could buy 8 condominiums in Calgary for what you could buy in Vancouver. You could buy 1. You can buy 6 to 8 there, right, and rent them out. So,
unbelievable.
That's a Western investor pick for 2023.
Well, I can say, Frank, your previous years, you guys have been spot on when you've been picking the markets,
I was just
right?
thinking the Kelowna one, and they're off the list now because the prices are too high.
Same with Victoria. Frank talked about how, like, you look at the industrial market over in Victoria, and it's got the lowest vacancy rate in North America. And I know our Victoria office has done like industrial lease rates over there, like into the 20s now.
Oh yeah, it's so tight over there now. Yeah. It's just unbelievable. Like it's tighter even than Vancouver. It's like 0.1 or something. It's just nuts.
So Frank, before we let you go here, we appreciate your time. We know you're a busy guy. We have a 6-pack of lighthearted questions we ask all of our guests so we get to know you a little bit more outside of the office. Can we have you stick around for about 2 more minutes?
Sure, yeah.
The 6-pack is powered by our great friends over at Red Point Law.
Oh, the guys at Red Point Law are fantastic, Cory.
For all your legal needs when it comes to commercial real estate, visit them at redpointlaw.ca. All right, Frank, first question up. Favorite restaurant or bar when you find the time to sneak out?
I'm trying to think of the name of it. It's down in Gastown. Okay, I'm going to say the Beach House.
Oh, that's a good one.
Yeah.
Yeah, can't go wrong with the Beach House.
Okay.
Yeah, I like that.
We got the Beach House.
I was at the one in New Westminster there. I was at the one in New Westminster a couple of months ago. Well, it was great too.
Good.
Okay, number 2, Frank, and we know you're a man of letters, but if you're watching Netflix or another streaming service, what are you binging these days?
Okay. What did I binge? Oh yeah, that Viking thing.
Oh, there's a guy in our office that loves that show.
I love that one.
So Frank, you haven't been the best individual here, and you unfortunately find yourself on death row, and it's your last day on earth, and you get to pick one meal. What are you having?
Steak and fries.
That's a good. Anywhere particular you'd get the steak from? Gotham's, the Keg.
No, the Keg. No, the Keg. The teriyaki steak from the Keg.
Oh, the Keg. You can never go wrong with the Keg.
Got to volunteer for death row for that.
And you know what? I think the show is literally called Vikings. Okay, so you're at a bar. It's getting late. Karaoke comes on. What song are you singing?
Okay, I want Kiss.
Okay.
And the song is I wanna rock, I wanna rock and roll all night and party every day.
That's Matt's anthem.
That was great.
Matt
great.
lives by that song.
I think I choose that song as well.
So Frank, that might
Kindred
have been
spirits.
that might have been a
Okay.
prelude to our next question. Favorite band?
The Rolling Stones.
Oh, another good one. Rolling Stones.
Can't go wrong.
The Rolling Stones, man. I'm so sorry that we're starting to lose them now. But boy, yeah, that's the Stones.
They've had a good run though.
Always.
They have had a good run.
They sure did. They're still my favorite. They're still the greatest rock and roll band in the world, though. You know.
I don't. I would agree with you. Actually, I think it's incredible how relevant they've stayed over the past. What is it, 60 years or whatever it is?
Oh, I know. You listen to Satisfaction now, and it's like it was written yesterday.
Yeah,
you know,
They're definitely ahead of their time.
Yeah.
Last but not least, Frank, something you have bought for under $1,500 in the last little while that has transformed your life or at least improved it
Electric
mildly.
bike.
Oh, you got an okay. I haven't met a person that hasn't spoke very highly of an electric bike.
They're fantastic. And get the hub bike, unless if you're not like a conventional, like you know a lot about switching gears on a 10-speed and everything, which I didn't. You know, like I'm not a big biker, but the electric bike, because I live up here in the Sunshine Coast, you know, and the electric bike is just fantastic. I just love it.
Excellent.
That is a good one. I almost bought one this summer and then passed, but I feel like it would really change the way I get to work.
The best part of electric bikes.
No kidding. They're good. You could shoot along 40 kilometers an hour. It's just amazing. And you still have to pedal it a little bit, you know, but you don't have to sweat. They go up over the hills. Oh, it's fantastic.
I live in Coquitlam in a place called Burke Mountain. And on the weekend, you get quite a few avid cyclers that will like bike up the mountains, the streets. And my favorite part is when you're watching this poor guy just sweating and he's just giving her, and he's been doing it for about an hour and a half at this point, and he's barely moving the pedals. He's going so hard. And then you get the guy in the electric bike just goes flying by him and gives him a look like, get out of the way.
Oh, I've done that on the bike so many times. I always give a jaunty wave, you know? Because I know they can't lift their hands off the handlebar; they'd fall over. Right?
Well, Frank, we appreciate everything you guys do over there at the Western Investor. Obviously, we're very, very avid followers of the Western Investor there. How can our guests find out more about what you guys are doing at the Western Investor and over at the BIV Media Group?
Well, just start going into, and I think today our digital edition is out for the September edition, which is good. It's out today, or the October edition. I'm sorry, the October edition is out today. This I'm working on the November edition right now. But if you go to westerninvestor.com, or if you want to see the digital edition, just Google Western Investor Digital Edition. You'll get the link to it. And we're putting up stories every day. Peter Mitham is writing for us now too, which is one of the better, one of the top real estate writers in Vancouver. He just joined our team there a month or so ago, doing fantastic. Great to have him on board. And anyway, I think we're turning out the best real estate information in the city, and so read it. I advise anybody to read it, and of course to advertise in it.
Yeah. Absolutely.
Yeah, we appreciate that.
No, it's we agree, and that's why we asked you back, and hopefully we can have you back, maybe even before next year, Frank. But it's always great to hear these top five. I think it's makes for some exciting listening.
Yeah. Okay. Well, thank you very much for having me on. I appreciate it.
I'm going to go on the record and say that I think we need to make this almost an annual thing. We've had Frank back twice now. We're going to make this like an annual thing. We're going to have you back on to talk about the top 5 cities. You guys have been so bang on the market that I'm going to seriously go look on the map to find Banfield and go buy some real estate.
I was going to say, yeah.
Well, I'll race you over there. Okay.
Sounds good, Frank. Thank you so much for your time. As always, have a great day.
Okay, bye.
Take care. Bye-bye. And there you have it, folks. Our interview with Frank O'Brien, BIV Media Group, Western investor, and all around just a great guy.
Famous in the commercial, I would say in the Vancouver landscape,
he
but
is.
the Western Canada, the commercial landscape for sure.
Yeah, no, they put out amazing stuff on a monthly basis over there, so we're very lucky to have him. I mean, put you here, listen to the episode. Nanaimo came out, we were cheering. Penticton came out, we were cheering. Banfield came out.
Hold on, East Vancouver, I was cheering.
We haven't got that far yet.
Oh, sorry.
Banfield came out. We're all Googling it to find out where it is. East Vancouver came out.
We both, by the way, during, as he was describing what was going on in Banfield, we were both literally on realtor.ca showing each other properties.
What can we afford to buy there, which apparently is still nothing.
Yeah.
And we're trying to figure out where Banfield was. Now we know. East Vancouver.
That was
home to the Scalina brothers.
We've been pumping East Van for a long time, but that was nice. That was, I think, the market where he said, if you can't make money there, you should hang it up.
Yeah. So East Vancouver, and then the number one market, not in the province of BC this year. Last year was Victoria. Calgary, which earlier on before we recorded, he made mention that it's not in BC. First market we thought had to probably be Calgary.
Yeah.
And was Calgary.
Yeah.
So.
And no, the logic of those picks, I feel like I know it was you and I who talked with Frank last year. And one thing I like is how he kind of goes, he logically walks you through why it's a pick, but he's passionate about it, which is great. So no, great having Frank on the show. Cory, before we cut for the day, what else do we have? First off, I just want to say, you just mentioned 300% growth over the last 2-3 years at William Wright.
Yeah,
we were talking about
we've been very fortunate,
Globe and Mail award. That's incredible. So congrats once again. How can people contribute to William Wright's growth and find out more about what you're doing over there?
So they can visit our website anytime at williamwright.ca. Feel free to sign up for all the newsletters, get the latest and greatest. You can reach us at our Vancouver office, 604-428-5255. Let us know what you're looking for. We'll put you in touch with the best broker we feel to fit your asset class anywhere in the province. Or you can send me an email, Cory@williamwright.ca. Always love hearing feedback about the show. Some good, some changes that people would like to see. We are a podcast of the people, so tell us what you want to hear, and we'll go out there and we'll try to get that. Chances are, if you want someone who's really high caliber of a guest in a very, very high position, they probably won't return our phone calls, but we will still try.
No, you know what?
We will still try.
You've had every mayor in British Columbia on this show. Don't sell yourself short. And if you want synopses of these episodes, you can always head over to VancouverRealEstatePodcast.com, where all things real estate related live, including the Vancouver Real Estate Podcast and the Vancouver Commercial Real Estate Podcast. We'll be back next week as always, but everyone, hope you have a good week, and we'll talk to you soon.
Thanks for listening, guys.
Subscribe today.